everyone, welcome to Oliveboard. My name is Dinkar and I welcome you all in this session today of Master Descriptive Answer Writing Series, 100-day series. I hope everybody is healthy and following all the COVID-19 protocols. As you all know that the situation of the country is going bad nowadays because the cases are rising. So I am just expecting everybody that they are following all the COVID-19 protocols and make sure you are safe and your family is safe. Okay. And also make sure that you get vaccinated as early as possible. Okay. And let me tell you one thing, on Monday, every Monday, I have a lecture at every 6 p.m. where I take basics of economy. Today, I have discussed about the financial market related to our money market and capital market. If you wanted to know about this market, you can just go and attend that lecture, okay, that I have taken at 6 p.m. So let's start with our session today. And before that, let me see how many people are there, okay. 1 minute. Okay, so we have Lalit. Welcome, Lalit. Hello, Kritika. Welcome to the session. I hope all of you are enjoying my sessions. Okay, since you are there since 38 days. So I am just assuming that you are really liking my lectures, and thank you for your support, especially related to the series that we are running. And I hope you are registering for our courses just to get the more better experience, those who are the paid members over there. Okay, so I hope you have already gauged the quality of the lectures, and right now you can just make up your mind regarding the things. Okay, hello Shivani, welcome to the session. I think I have seen you in my 6 p.m. lecture, and I again welcome you in this 9 p.m. session. Welcome to the session. Okay, so just 1 minute. Okay, so this is our Master Descriptive Answer Writing for RBI Grade B 2021-2022 100-day series. Okay, so here what we are doing is that we are asking 100 questions for 100 days. So the question will be based on economic and social issues. Topics will be based on economic and social issues, financial management, descriptive English, current affairs. So everything we will be covering over here. So total 100 questions for 100 days. Till today we have 37 questions in our portal. If you are attempting any 3 of the questions, then you are eligible for 35% off on all RBI plans. All RBI plans. Okay, and if you are not getting the coupon code in your email ID, just I will tell you to whom you can just contact, and then she will provide you with the coupon code. Okay, hello Abhishek, welcome to the session. Good evening to everyone, those who have joined the session. Good to see you in large numbers. I really like the people are joining in such a large number, and I just really thankful to everybody for joining the session. Thank you so much, guys. Okay, so again today we will be discussing one of the finance static portion that is related to my previous lecture only, that is called capital budgeting. Okay, in the previous lecture that I have taken, that is 37th day lecture, it was related to capital budgeting, and today just a small portion of that. Hello Avinash. Just a small portion of that we are going to discuss is cost of capital. Okay, it is just a very small portion today. I think the lecture will be very short today. So here we will be discussing the cost of capital. That means how much it is costing to get an investment. That sorry. That means if you are taking the money from someone and you have to repay back after some time, so how much it is costing you. Okay, that means if you are borrowing the money from someone, that means you have to pay some interest on that money. Okay, so you have to make what is the actual cost of capital that you are going to give. That means if I am buying 100 rupees, okay, and 10% interest is there, so after some times I have to give that person 110 rupees, right? So actually this is the cost of my capital. Okay, so I have to provide them with 110 rupees. Okay, so this is just the basic example. Okay, See Shivani, it is just a general example I have taken. Okay, it is just a general example I have taken. Okay. Yes. That's we are going to discuss today what is all about. Okay. Just don't worry about that, Shivani. We will be just discussing everything about that. Okay. Now, first of all, you should have a note about that. This topic does not feature directly in RBI Grade B syllabus. Okay. However, it is a fundamental aspects for understanding the financial management and functioning of the financial market. Okay. And also related to the risk management, okay, which are all part of the syllabus. Okay. So that is why cost of capital we have taken, so that you can understand the other three topics properly for that topic, right? So basics. The cost of capital is a very important financial concept. Yes, we agree with that. Okay. So normally how it is linking. It links the company long-term decision with the wealth of the shareholder as determined in the marketplaces. So whatever the company makes the long-term decision, how the wealth of the shareholder will be affected. All these things depends on the cost of capital. That means at what price you have taken the capital. So it depends on the company. It links the long-term decision, like it may be disastrous also, it can be advantages also, and for the shareholder it is also affecting. Maybe company has taken a loan on a very high interest rate. Okay, if a company has taken a loan at a high interest rate, and at the last, if the company wants to pay back, so shareholder may not get their respective dividends or something like that. Okay, so it also affects shareholders and those who are the part of that chain. Okay, so whenever a business organization raises the funds, they have to keep in mind the cost of that fund, how it will cost in the future. Okay, what will be the future aspect of that costing. Okay, so hence computation of the cost of capital is very important. That is why we are discussing this topic. Computation of cost of capital is very important. Mainly it deals with the interest only. Okay, interest rate at the present value. Okay, earlier you have taken 100 rupees, but in the future they may change. The value of the 100 rupees may not remain same, and also you have to pay the 100 rupees also. Okay, so here the computation of the cost of capital is very important in order to make sure the financial management can have a close look on it. Okay, so that you can have a good decision making regarding from where to take fund, how much to take fund, how it is going to cost in the future, and are we able to survive with that kind of fund or not. Okay, right? Now, what is capital? The basic question is, what is capital? Okay, capital is simply as an amount of money invested in the business to produce goods and services, which ultimately generates the income. Okay, this is the important definition which is related to the capital. Okay, so the capital can be raised by anything, like bonds, issuing of the shares. Okay, anything. Okay, so the company may raise money from the public by issuing the bonds, or may simply avail the bank loan. Anything, just for the working principle for the company, bank can raise money from anywhere. Okay, but it should not be normally short. It should not be short term. It should be long term. That is why we are calling that as capital. It should be long term investment. Okay, now, so cost of capital. Cost of capital is a return expected by the providers of the capital. That means somebody might have provided with the capital, so they are expecting some return. Okay, how much I will be getting back. So who are the providers of capital? They can be shareholders, they can be lenders, debt holder, those who are holding the debt instrument with you, right? So these are the people, or etc. Somebody can also be the provider of the capital. Okay, but for that they need something extra after that lending is over. Okay, so the cost of capital is a return expected by the providers of a capital to the business as a compensation for their contribution in the total capital. So what is this compensation is called? That means you are taking money from me, then you have to provide me with a compensation. So that compensation is only called as interest. That means you have taken my money today and you are giving me back at after 1 year. Okay. So what is the compensation you are going to provide to me? So that compensation we can call it as interest. Okay. So when an entity, corporate or other procures finances from either sources as listed above, they pay some additional amount of money beside the principal amount. Okay. So that additional money, so the additional money paid to these financiers may be either one-off payment or a regular payment at a specific interval. That means either one-off payment. Okay, you give me money 1 year, after 1 year you just take back your money with the interest. Okay, or a regular payment, like every 1 month I will provide you with 10 rupees, every month I will provide you with the 10 rupees. Okay, that is a regular payment of the interest. Okay, so this additional money paid is said to be the cost. So whatever this is, this additional money is paid is said to be the cost of using the capital, and it is called as cost of capital. That is called cost of capital. See Shivani, if company is not able to pay that, then company will have to go into the NPA categories, non-performing assets. Okay, then company has to declare insolvency, right? If the company is not paying interest for 3 months, right? As you all know that how the interest rate works, how the things became NPAs. Since 90 days, if any of the thing is not providing the interest rate, then that asset will be called as NPA. Okay. So if they are not providing the interest, that means the company is not getting. If they are not providing the interest to their holders, so that means the company is not running properly, or they purposely are not providing you with the interest. Okay, so in that case, various measures can be taken by the SEBI or the RBI or the banking institution, whosoever they are working with. Okay, I hope you got it, Shivani, right? Now, so cost of capital. There are other names also given to the cost of capital, right? The cost of capital expressed is rate is used to discount, compound the cash flow or stream of the cash flow. Cost of capital is known as cut-off rate. You can say as interest rate, hurdle rate, minimum rate of return. It is all that like that. Okay. So this is like, what is the cost of capital? Normally it is called as interest only. Okay. So it is used as a benchmark for framing of debt policy, taking capital budgeting decision. Okay, so this cost of capital, that means the type of interest that you are going to get, you are going to pay. Like if this company is there, company A, okay, the company A wants some money from some bank. Okay, so what is the interest rate this bank is charging with company A? So this interest rate, now the company A will decide this benchmark, that is cost of capital, will decide what will be the company debt policy. That means at what rate in that company can take the loan. Okay, and it also helps in capital budgeting. That means how much capital budgeting, like how much we can handle it properly, and at what rate we are getting we are getting loss making sector. Okay, so you can just go to my capital budgeting lecture and you can understand. I have discussed in a detailed manner regarding the capital budgeting. Okay, so this cost of capital helps the companies or any institution to frame their debt policy and also to take decision based on capital budgeting. Okay, right? Then okay, now what is this? Characteristics of cost of capital. The following are the basic characteristics of the cost of capitals. Okay, Cost of capital is a rate of return. That means interest rate of return. Okay. It is not a cost as such. This return, however, is calculated on the basis of actual cost of the different components of the capital. So, how much we are going to get back? So, it is checked by looking at the various actual costs in which we have invested. Okay, in which we have given our capital. Okay, so a firm cost of capital represent minimum rate of interest, like means how much minimum rate of interest returns we should get. That will result in at least maintaining the value of the equity share. So that make sure that your equity shares value doesn't go down. So we have to maintain a minimum rate of return. Okay, so it is related to the long-term capital funds. Right? So these are some of the characteristics of cost of capital. So cost of capital consists of normally three components. First one is return at zero risk level. That means guaranteed risk with no zero risk. That means there will be no risk. Then we have a premium for business risk. Okay. Then we have a premium to business risk. The extra return above the risk free. Just 1 minute. Okay. Just one. Sorry. Okay. So then second one is premium for business risk. So there, what this means is the extra return above the free risk investor will receive as a compensation for investing in the risky asset. That means there is one type of investor who just asks for there should be no risk. Okay, that are called as R0. Okay, and there are some business for the premium for business risk. Here the investor will earn some extra above the zero risk if they are investing in some risky assets. Okay, then premium for financial risk, it is also like a same business risk only, but for certain different categories. Okay, it is just like that. Okay, so various risks are there. So based on that, various interest rates are there. So if there is a high risky asset is there, if there is a high risky asset, so the interest rate will be also very high. Okay, that means if you are investing in any places where there is no where there is huge risk is involved, so that company will pay you good interest rate also, because company also thinks that they may fail, they may rise. Okay, so where you are just investing in the risky asset, you are getting more like that. Okay, then what is the significance, why we are actually thinking about what is the significance of cost of capital? The cost of capital is important to arrive at a correct amount and helps the management or an investor to take appropriate decision. Okay, so how much the capital is costing you, it helps the management or any investor, they can take appropriate action whether we wanted to invest here or not. Okay, so the correct cost of capital helps in the following decision making. First of all, they will try to evaluate of investment options. Okay, that means the estimated benefits like a future cash flow from any available investment opportunities, they are converted into present value. Okay, so the estimated benefits from the investment opportunities are converted into the present value of the benefits by discounting them with the relevant cost of capital. Because whatever you buy today for 10 rupees, you may not able to buy for the same 10 rupees in after 3 years or 4 years, right? So here it is pertinent to mention that every investment option may have a different cost of capital. That means if you wanted to invest in gold, maybe their cost of capital may be less because golds have their own value and it very less fluctuates. You can invest in the currencies. Okay, there is a, like if you invest in dollar, then you have a less fluctuation, but you invest in Indian currencies, huge fluctuations are there. Okay, so based on the type of investment what you are doing, so cost of capital also vary. Okay, so hence it is very important to use the cost of capital which is relevant to the options available. Okay, then Financing decision. What is the significance of cost of capital in financing decision? So when a finance manager has to choose between the two sources, that means whether they should take loan from company bank A or bank B. Okay, so they can simply compare their cost of capital. What is costing? Whether from company A we are getting at less or from company B we are getting less. So whosoever is giving less, whosoever is giving at less interest rate, the company will go for that. Okay, so their cost and choose the sources which have a lower cost. Okay, that means if I wanted to open a factory and there is a bank A and there is a bank B, I have to take 100 rupees. Okay, I have to take 100 rupees from that bank. Bank A say that okay, I will give you, but after 1 year you have to give me 110 rupees. Bank B will say okay, I will give you 100 rupees, but after 1 year you have to give 105 rupees. So from where I will take the loan? I will take from the bank B, because bank B cost of capital is less. Because bank B cost of capital is less, so I will take loan from the bank B, right? Then third one is designing of optimum credit policies. Okay, so the third significance of cost of capital is it helps in designing the optimum credit policy while appraising the credit period to be allowed to the customers. The cost of allocating credit periods is compared against the benefits earned by providing the credit to the customers of the segment of the customers. Here cost of capital is used. Here cost of capital is used to arrive at the present value of the cost and benefits received. That means what are the benefits that we are getting and at what cost we are getting. Okay, so while appraising the credit period to be allowed to the customers, so here customers are also taking into place. Okay, so how much cost of capital have been used and what type of benefits we have received, here that comparison also can happen. So that will decide the credit policy, like how much credit we have to take from at which place we have to take. Okay, so whether whatever credit we are taking, the same benefit we will be getting in the future or not. Okay, so like that we have to, it will help, cost of capital helps in designing of the optimum credit policies. Okay, now factor affecting cost of capital. What are the factors that affects the cost of capital? Okay, so there are three primary factors, that is interest rate in the economy. What are the interest rate in the economy are there? That you can see that capital asset pricing model. Okay, so it is a relation between the systematic risk and the returns on that asset. That means what is the risk involved and what is the expected returns. Okay, then tax rates are there. Okay, so government tax can fluctuate anytime. All of a sudden government taxes can go up, down, and all those things that can happen. Okay, then market risk premium is also there. Okay, it reflects the perceived riskness of the equity. So market can also go up, market can also go down. So all these things are the factors that affects the cost of capital. So internal factors like company owns investment policies, capital structure, and dividend policies can also affect the cost of capital. So all these factors are there which affects the cost of capital. Okay, now the questions for today, you guys. For today's, you have this question: what do you mean by the term cost of capital? Explain the factor that affects the cost of capital. Okay, right? What do you mean by the term cost of capital? Explain the factors that affects the cost of capital. So this is the 38th question of today. Okay, so those who are the new joiners, let me tell you how they can go and write the answer over there. First, it is a free portal. It is a free portal. First of all, please go to Oliveboard Discuss Forum on the website. Check the descriptive RBI Grade B tab. There you will be finding all the 38th question. Attempt 3 questions for RBI Grade B. You will be getting 35% off coupon in your email ID. Plus, but use the same email ID. Use the same email ID for writing the answers. Okay, and if you have any query, just email to reeti.gulati@oliveboard.in. She will be providing you with a 35% off coupon. Okay, guys. So this is the last for today, and let me tell you, we have a huge following in YouTube, Instagram, and Facebook. Do go there, join our channel, and at the last, never forget to like, subscribe, and follow. Happy learning, guys. Thank you so much. Take care. Bye bye, and good night. Anything else anybody wanted to ask, just let me know. Thank you, Shivani. Thank you, Shivani. And Emma, good evening. But you joined late today. But today's session is only got over within half an hour. Thank you for joining. Thanks everyone for joining the session. Thank you, Lalit. Thank you, everyone. I just really like that everybody joins the session at the proper time. Thank you so much, guys. Okay. So see you tomorrow with the 39th lecture. See you, guys. Take care. Bye bye and good night.